All right, well, as we head into the fall, obviously there's a long list of considerations for investors and the economy looking a little wobblier. It's one of the reasons we keep hearing in the United States about the possibility of Fed rate cuts. And yet, when you look at the stock market, in fact, when you look at the Canadian stock market today, we have just hit yet another intraday all-time high for the benchmark. For a little bit more context on the markets, let's bring in longtime guest Laura Lau. She's the Chief Investment Officer of Brompton Group. Laura, it's nice to see you.
Great to see you, John.
So let's just start with this Canadian stock market story. It's actually one of the biggest investment stories of 2025. What has been the driving force behind the Canadian stock market, in your opinion?
I think one thing is, even though we see that the economy is slowing down, there's tariff and other noise, the earnings actually are holding up very well. And we have a lot of financials, and the financials have been doing well, especially the banks. It looks like after the last earnings season, the loan losses have likely peaked. And when that happens, that's usually good for bank stocks.
Yeah, we've got a near 15% advance for the year now for financials on the TSX. Of course, tech's also been doing well this year. We've seen that in the United States, and that's rubbed off on the Canadian equities. And then you've got this gold story. I'm looking at the year-to-date advance for the TSX materials sector. It is eye-popping, almost 54% at this point. We saw gold hit yet another record today. So there are these individual stories that have been fuel for Canadian equities. What do you make of the fact that investors like tech, but they also like gold?
Well, I think that it makes sense to like gold. Like, we see that the 30-year bond in the U.S. is starting to hit that psychological 5% level. And the reason is, it's becoming more obvious in the U.S. that they're willing to handle more inflation because they want more economic growth. And with inflation, that's good for gold. So one thing people don't realize is, if they look at the central banks and what do they hold, number one is U.S. dollars. Number two is gold. So gold is becoming a store of value. And, if you're worried about geopolitical risk, you're worried about tariffs, they all run to gold. So
if we've got a narrative around continued spending, government spending, and a growing narrative around interest rate cuts, even if we're looking at that through the lens of, that's happening because the economy might be starting to look a bit spotty, just that recipe is an inflationary recipe that the gold bugs tend to like.
Yes, the gold bugs love this kind of environment, and it does feel like, the Fed put is in place. Okay.
Now, on the tech front, I did think it was interesting. We saw this big move today in shares of Google's parent Alphabet. This has been one of the most talked about tech stocks, only because after the run-up in the so-called Magnificent Seven, you get these deeper questions and conversations around valuations. Alphabet is a company that was sort of sporting a much more normal, shall I say, valuation versus some of the other companies. And as soon as we learn that they don't have to divest one of their, key properties, we see a notable response in the market. What do you make of just the fact that investors very quickly moved into Alphabet shares? Does it tell you that people are still infatuated with tech?
I think that clearly the market is very infatuated with tech. NASDAQ is nearly at all-time highs, and the Magnificent Seven, that's still where the earnings growth has been. And Google has been the cheapest of the Magnificent Seven. So now you have, the overhang is cleared. So it makes sense. You still have questions, what's the future of search? But they are trying to combat it with their own AI chatbots.
So for you as an investor who's watching all the headlines in the short term but making long-term decisions, what's your general strategy at this point?
I would say right now, September typically is the worst, month of the year. And we did get a big pop after Jackson Hole, when it seemed more obvious that it looks like we are going to get a Fed rate cut in September. And when the Fed,
some of that might be factored in.
And the Fed, when they do cut interest rates, usually the market does go up. So we expect.
Oh, I see.
Yeah, so we do expect 2 interest rate cuts this year, and then, to the end of next year, about 5 interest rate cuts. And as I said, that is typically good for the market. So I'd say we're still in buy the dip mode. So I do expect some volatility in September, and I would say that, it looks like buy the dip.
Be ready for it, but also be ready to to your point, buy the dip. Okay, let's talk about some individual stocks that you'd feel comfortable owning in a portfolio right now. I'm going to start with Canada since we're, at these record levels, and that's, prompts fresh questions. Well, what do I want to add after a big run up? You talked about financials before. Royal Bank is a stock that generally you're pretty constructive on. Obviously the biggest bank in the country, one of the most influential stocks on the TSX. What is it about the business that you like?
So what I like about it is the blue chip stock in Canada. And we saw after the last quarter, it's Big Blue's just getting stronger and stronger. Personal banking's getting better, and out of all the banks, they definitely had the best earnings beat. And I think that can be well supported with their HSBC acquisition. So we still like Royal, and yes, it trades at a premium to the other banks. First of all, it deserves to, and that premium is still less than normal.
And let's also look at investment ideas through the lens of consumers. We were talking about a U.S. dollar store operator earlier. Dollarama has been this huge winner for investors over the long term. I believe they said that they are expecting some slower sales growth as we go through the rest of the year, as consumers are being a little bit more cautious. In the face of that, when you look at this as an investment vehicle, what do you see? So
what I see is that consumers, they want value. And we see that in the US, and we see Canada, and so they go to Dollarama. And the other thing I see is I think that the international runway for growth is very strong. I was just in Australia. I went to see their reject shop.
Oh, is that right?
And I do think that there is a lot of potential there. They don't have as many dollar stores there as here. And it's more a discount store than a dollar store. And I believe that in Mexico, they can do a great job bringing their brands, their Dollarama, their sourcing into Mexico and Australia.
I'd also seen some analysts make the argument that management has a track record of being conservative when they're giving outlooks. So, if they're being conservative in their guidance, is that a bad thing for investors when, to your point, maybe if people have to make tougher choices on what they buy or where they buy it, sounds like you think Dollarama has sort of a better platform to offer to people than other ones. And then a U.S. name that you were watching, Constellation Energy. Now, Constellation kind of gets caught up in this big story of the power boom, the demands on various players tied to the AI boom. And Constellation, correct me if I'm wrong, they're the ones who kind of kicked off in a lot of ways sort of the big tech seeking power sources around the world. Microsoft had a big partnership
and
with
Meta,
them.
they both have partnerships with them, nice long-term contracts, because these companies, they seek, clean energy, and they have nuclear, they have wind, they have solar, and a lot of this they have already. So the biggest bottleneck for AI is actually, electricity. It's no longer really NVIDIA chips. The biggest bottleneck is energy. And part of the reason why is it does take time to permit energy, to build it. They already have a lot of energy, and they're just waiting to sign contracts for a lot of these.
The ability to have that backlog is what gives you confidence as an investor.
And existing power. They also just bought Calpine, and Calpine is one of the biggest, independent producers in the U.S. So I think they'll be able to sign a lot of contracts with those assets.
Laura, great to see you. Thanks a lot for sharing your wisdom with us. Appreciate it. Laura Lau joining us of Brompton.